The Federal Reserve hasn't cut interest rates since 2008. That is, until today. The move was a controversial one, and it comes at a time when the U.S. economy remains solid. The risks come from a slowdown in global growth, so the decision to lower rates is considered an insurance cut designed to help stave off the possibility of an economic downturn. But the chairman signaled that this is not the start of a trend, and stocks dropped sharply. The Dow Jones Industrial Average dropped 333 points to 26,864. It had been down more than 450 points. The Nasdaq slid 98, and the S&P 500 was off by 32. Steve Liesman reports tonight from the Federal Reserve.
The Federal Reserve cut interest rates for the first time since 2008, bringing the rate it controls for overnight lending among banks down by 1/4 percentage point to a new range between 2 and 2.25%. That was largely what the market expected, but in a press conference after the statement came out, Fed Chairman Jerome Powell appeared to dial back market expectations for future cuts.
The committee is really thinking of this as a way of adjusting policy to a somewhat more accommodative stance. And we're thinking of it as essentially in the nature of a mid-cycle adjustment to policy.
Stocks sold off almost immediately as markets began to question whether the Fed will deliver the 2 additional rate cuts that are priced in. Powell later went on to clarify, saying he did not mean to imply the Fed was done after this single cut. And importantly, the Fed also provided further easing by ending the reduction of its balance sheet 2 months earlier than planned. The Fed in its statement explained that the rate cut comes amid a U.S. economy that's still growing, but with growing concerns about overseas weakness.
To ensure against downside risks to the outlook from weak global growth and trade tensions. So that is, in a sense, that is a risk management point, and that is a bit of insurance. But we also feel like weak global growth and trade tensions are having an effect on the U.S. economy. You see it now in second quarter. You see weak investment. You see weak manufacturing. So support demand for it there, and also to support return of inflation at 2%.
Powell did not have the full support of his committee. 2 Fed bank presidents dissented, saying they wanted to hold interest rates unchanged. Asked how investors can know what comes next for the Fed, Powell said there isn't a lot of experience among central banks in knowing how to respond to global trade wars. He said the Fed is, quote, learning by doing. For Nightly Business Report, I'm Steve Liesman in Washington.